Financial statements are formula records of the financial activity. Accounting standard would improve the creditability. There are two types of it. There is tangible and intangible. Tangibles are land, building, machinery, furniture. Intangibles are Hello, my dear students. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Fundamentals of Business Accounting, first semester, Unit 1, Session 2 of BBA in favor of Introduction to Financial Accounting. In the last session, I told you what is an account. An account is a summarized business transaction relating to a person, firm, or industry to know the profit or loss. So here the word is called summarized business transaction. What is transaction then? Transfer of property from one person to another person is a transaction. I will repeat. What is transaction? Transfer of property from one person to another person is a transaction. There are two types of transaction. One is called cash transaction, another is credit transaction. What is cash transaction? Transfer of property from one person to another person for a cash is called cash transaction. What is credit transaction? Transfer of property from one person to another person. The particular person will promise, I will pay your money after some days, after a month, after a week, after 15 days, after a year. So that is called the credit transaction. In India, credit transactions are more and cash transactions are less. This is the basic idea of accounts. So account is a summarize, classifying, measuring the activities we say. Okay. We'll move on now. Financial statement. What do you mean by financial statement? What are their objectives? This is a very common question they are going to ask. Financial statements are formula records of the financial activity. Any activities relating to what is called finance, called financial activities, and position of a business, person or other entity, relevant financial information presented in a structural manner and in a form of which is easy to understand. So financial statements are formula records of the financial activity. This is important. It's only related to financial activity and position of a business, person or other entity, relevant financial information. This is important. Only connected to financial information presented in a structural manner and in a form which is easy to understand. This is financial objective. What are the objectives of financial statement? Providing valuable insights about the financial position, the position of the company, and performance of position of the company, how much money we are having, how much money we have to pay, what is the amount due to company, what is the amount due from the company. All this information, financial position, shows how much asset we are having, how much liability you have to pay, and performance of the company. To facilitate better decision making, if you want to take the decision making, because financial decision is taking whether we have got a sufficient fund towards particular. Any decision is taken depends upon the amount available, financial amount available. Assessing the organization ability to generate future cash flows. You have to understand what is cash flow. There are two types of cash flow. Cash inflow and cash outflows are there. You have to understand how much inflows are there, how much outflows are there. So cash is coming in, cash is going out. Assessing the ability to generate future cash inflows, how much cash comes, how much cash goes. Enhancing transparency and accounting in financial reporting. This is important. Enhancing transparency. So when you are doing the financial activity, there must be transparency And accounting is financial reporting, meeting legal and regularity obligation. You must act according to legal entity and regularity obligations to support benchmarking and comparison with the industry's peers, serving as a basis for planning, budgeting, and forecasting activity. You must plan. The budget means the probable income and expenditure of a concern. You must have a proper planning. Providing a historical record of financial transaction for internal and external purposes. You have to provide such information, historical record of the financial institution, how we have built up the institution, what is the position of the company in finance is considered, and internal and external purposes. Financial statement. What are qualities, characteristics of financial management? The qualitative characteristics are, what are qualitative characteristics of financial management? The qualitative characteristics are understandability. You have to understand the proper position of the company, relevance. What's the relevance you got? Reliability, how much you can rely on that. Comparability, variability, timelessness, faithful representation, materiality. So these are the qualitative characteristics. One is understandability. Second one is relevance. Third is reliability. Fourth one, comparability. You have to compare with other organization. How much variability, how much vary we from the organization. Timelessness, faithful representation, and materiality. Financials. What are the elements of financial statement? They will ask for 5 marks. What are the elements of financial? The elements are asset, how much property we are owing by the business. Liability, how much money we have to pay to outsider. Equity, there are 2 types of share. One is called equity share, another is the preference share. Equity shareholders are permanent shareholder, whereas preference shareholders are temporary shareholder. All these information. Investment by owners, how much investment has been made by the owners. Comprehensive income, how the income has been arrived, how they have been utilized. Revenues, expenses, gains and losses. So what are the elements? Assets means property owned by the business. Liability which we have to pay. Assets means maybe land, building, machinery, furniture, motor, car. All are asset, cash, stock, bills receivable. Liability which you have to pay, creditor, bills payable, provision for taxation, proposed dividend, equity share, and preference share, investment, revenues, income, expenses, gains and losses. Accounting standard. This is one of the important that will ask from the examination point of view. Accounting standards are standardized guidelines. It's a guidelines for financial accounting covering the preparation and presentation of financial statements. If you want to prepare a financial statement, you must understand the guidelines. Accounting standards are standardized guide. It's a standardized guidelines. Now, come back. Advantages. It lays down uniform accounting policies and practices. So standards are given for each accounting policies and practices. Uniform accounting standards are followed by all business concerns in the preparation of accounts and in the presentation of financial statement. Financial statement means you are going to prepare trading account, profit and loss account, and a balance sheet. The financial statement of various business concern become comparable. Accounting standard would improve the creditability and reliability of accounting information. Accounting standard would improve the creditability and reliability accounting information. It curbs the unlimited flexibility. Accounting standards are formulated and issued by the Apex Expert Accounting. This is important. Accounting standards are formulated and issued by the Apex Expert Accounting. Objectives: to make accounting principle used in India at par with internationally recognized standard. So whatever the Indian standards are there, it should be recognized by the international standards. To adopt a uniform set of accounting principle for financial reporting. This is important. To adopt a uniform set of accounting principle for financial reporting. To create a single recognized framework, a common framework we have to be made to make international companies understand Indian accounting practice. You make such a way that even the international company should understand the Indian accounting practice. Whatever you practice, that should be understood by international companies. Then only whatever you have done becomes whatever we have done, that should be understood by international companies. To ensure transparency in the financial statement is important. There must be transparency in financial statement. Uniform accounting standard can help to eliminate the possibility of fraud or incorrect accounting. Uniform accounting standard can help to eliminate the possibility of fraud or incorrect accounting. List of accounting standards. So this will ask in examination, mention any 5 accounting standard. First one, disclosure of accounting policies. Accounting policy will be disclosed. Valuation of inventories. Inventory means stock. Cash flow statement, how the cash comes, how it will flow. Contingencies and events occurring after balance sheet date. Once the balance sheet is over, what are the effects of the balance sheet? Net profit or net loss of the period. Depreciating accounts, construction contract, revenue recognition. 9th one, accounting for fixed asset. Which are the fixed assets are land, building, machinery, furniture, motor car, goodwill. They are considered as a fixed asset. In fixed assets, there are 2: tangible asset, intangible asset. Tangible assets are land, building, machinery, furniture, motor car. Intangible assets are goodwill, trademark, and patents. Then accounting of effect changes in foreign exchange rate. How our accounting will affect the foreign exchange rate. Government grants, account for investment, account for amalgamation means when the 2 companies combine together, form a single company, that is called the amalgamation. Accounting for retirement benefit, borrowing cost, leases, earning per share. Earning per share means total profit divided by number of equity share. That's called earning per share. Hope you understand. Before that, this should be made very clear. Quality characteristics. The quality is understandability, relevance, reliability, comparability, variability, timelessness, faithful representation, materiality. This is important. Another, what are the elements of financial? They will ask for 5 marks. You just mention the name, that's all. Which are the elements are? They may be asset, it may be liability, it may be equity. Asset means property owned by the business, liability which you have to pay, equity means equity share capital and preference share capital, investment by owners, comprehensive income, revenue income, expenses, gains and losses. Accounting standards. It lays down the uniform accounting policy. Policy has been made. Preparation of accounts in the presentation of financial statement. Then curves the unlimited flexibility. There is no flexible at all. Accounting are formulated, issued by the Apex Experts Accounting. Only expert will be put the standard for the accounts are considered. Here, objective, to make accounting principles used in India at par with international recognition, adopt a uniform set of accounting, to create a single recognized framework. There must be transparency in financial statement. Uniform accounting should help to eliminate the possibility of fraud or incorrect accounting. These are the list of the accounting standard. At least you have to remember about 10. Number 1, disclosure of accounting policies, valuation of inventories, cash flow statement, contingency and event occurring after balance sheet date, net profit or loss for the period, depreciating account, construction contracts, revenue recognition, accounting for fixed asset. I told you fixed assets are two. There are two types of assets, tangible and intangible. Tangibles are land, building, machinery, furniture. Intangibles are goodwill, patents and trademark. Accounting for the effect of changes in foreign exchange rate, in government grant, accounting for investment, accounting for amalgamation, accounting for retirement benefit, borrowing costs, leases, earning per share. So any 10 if you learn, that's okay for you. Hope you understand. So in the first session, I already told you about the account. Account is a summarized business transaction relating to a person, firm or industry to know profit or loss. What is transaction? Transfer of property from one person to another person is a transaction. There are two types of transaction. One is called cash transaction, another is called credit transaction. What is cash transaction? Transfer of property from one person to another for a cash is called cash transaction. Transfer of property from one person to another for a credit is called credit transaction. For a promise, he is going to make a promise, I will pay your money. A customer buy the article from the seller, he will inform the seller, I will pay your money after 1 week, after 15 days, after a month, after 2 months, after 3 months. So there is nothing but a credit transaction. Accounts include both cash transaction as well as a credit transaction. Hope you understand this, and I already informed about the accounting standard. So standard have been made, about 10 items are there. So hope you understand this session. In the next session, I'm going to explain about the concepts and conventions of account. Till then, goodbye. We'll meet in the next session with the concepts and convention.